In a historic moment that has sent shockwaves through Washington and Wall Street, President Donald Trump yesterday signed the Genius Act into law, marking the first time in United States history that Congress has passed major federal cryptocurrency legislation. But this isn't just about digital currency regulation. This signing ceremony has ignited a firestorm of controversy over unprecedented conflicts of interest that reach directly into the Trump family's business empire. According to official White House records and congressional documentation, the Guiding and Establishing National Innovation for U.S. Stablecoins Act passed both chambers of Congress with remarkable bipartisan support. The House approved the legislation Thursday, July 17th, by a vote of 308 to 122, with 102 Democrats joining 206 Republicans. The Senate had previously passed the bill on June 17th by 68 to 30. This legislation creates the first federal regulatory framework for stablecoins, a type of cryptocurrency designed to maintain stable value by being backed one-to-one with traditional assets like U.S. dollars or treasury bonds. According to financial data, the stablecoin market is currently valued at approximately $250 billion and has been operating largely without comprehensive federal oversight. At yesterday's signing ceremony in the East Room of the White House, President Trump declared, quote, "This afternoon, we take a giant step to cement American dominance of global finance and crypto technology." The president was joined by top executives from major cryptocurrency companies, including Coinbase, Circle, Tether, and Gemini. However, what makes this historic legislation particularly explosive is the direct financial interest the Trump family holds in the cryptocurrency industry. According to CBS News reporting and Senate Democratic investigations, the Trump family owns a 60% stake in World Liberty Financial, a cryptocurrency company that launched its own stablecoin called USD1 in March 2025. Here's where the controversy deepens. Under the newly signed Genius Act, stablecoins like USD1 are now officially recognized as legitimate financial instruments with federal regulatory backing. Critics argue this creates an unprecedented situation where a sitting president has signed legislation that directly benefits his family's business ventures. Senator Elizabeth Warren of Massachusetts has been leading the charge against what she calls, quote, "a superhighway for Donald Trump's corruption." In a June interview with Rolling Stone, Warren stated, "A bill that turbocharges the stablecoin market while facilitating the president's corruption and undermining national security, financial stability, and consumer protection is worse than no bill at all." The financial implications are staggering. According to reporting from multiple news sources, World Liberty Financial has already secured a $2 billion transaction deal with MGX, an Abu Dhabi state-backed investment firm, to purchase a stake in the Binance cryptocurrency exchange using the Trump family's USD1 stablecoin. The Trump family receives transaction fees from every USD1 transaction, regardless of the currency's market value. The cryptocurrency market has responded with explosive enthusiasm. According to NPR reporting, the total cryptocurrency market cap hit a record $4 trillion shortly after the House vote, reflecting unprecedented investor excitement. Ether, the second largest cryptocurrency, has gained 18% this week alone, bringing its two-week gain to approximately 43%. David Sachs, Trump's AI and cryptocurrency czar, told reporters that President Trump, quote, "stepped in and saved this bill when conservative Republicans initially blocked the legislation earlier in the week." The president personally intervened when House Freedom Caucus members staged a rebellion that stalled the bill for nearly 10 hours during what Republican lawmakers dubbed Crypto Week. Major financial institutions are already positioning themselves to enter the stablecoin market. According to industry analysts, banks such as JP Chase and retailers like Amazon and Walmart are considering launching their own stablecoins, which could help them avoid credit card processing fees. The Genius Act establishes several key regulatory requirements that stablecoin issuers must follow. According to the official White House fact sheet, all permitted payments stablecoin issuers must hold 100% reserve backing with liquid assets including U.S. Treasury bills, insured bank deposits, and central bank reserves. The legislation also requires monthly public disclosure of reserve composition for all stablecoin issuers, along with annual audited financial statements for companies with more than $50 billion in market capitalization. Additionally, all stablecoin issuers must possess the technical capability to seize, freeze, or burn payment stablecoins when legally required. Importantly, the bill includes provisions banning members of Congress and their families from profiting off stablecoins. However, this prohibition notably does not extend to the president and his family, a detail that has drawn sharp criticism from Democratic lawmakers. The path to passage was anything but smooth. According to CBS News reporting, the legislation faced a dramatic rebellion from right-wing House members earlier this week. Representatives Chip Roy of Texas and other conservatives initially blocked a bill demanding that it be tied to legislation banning central bank digital currencies. The standoff reached a breaking point when House Speaker Mike Johnson canceled floor votes and rebellious members were summoned to the White House for direct negotiations with President Trump. After multiple conversations, Trump announced that the holdouts, quote, have all agreed to fall in line. The procedural vote to advance the Genius Act was held open for a record-breaking 9 hours, one of the longest votes in recent House history, as lawmakers negotiated behind closed doors. The drama culminated when several holdouts initially voted against moving forward before switching their votes to yes, ending the multi-day standoff. Representative Maxine Waters of California, the ranking Democrat on the House Financial Services Committee, delivered scathing criticism during Thursday's floor debate, stating, by passing this bill, Congress will be telling the world that Congress is okay with corruption, okay with foreign companies buying influence. The legislation has significant international implications that extend far beyond domestic markets. According to analysis from the International Consortium of Investigative Journalists, the current bill lacks strong provisions to combat cross-border dirty money flows, raising concerns about potential money laundering and illicit financing. Financial transparency advocates warn that the proposed regulatory framework doesn't go far enough to prevent the movement of illegal funds across international borders. Alex Ring, an advocate with the anti-cybercrime organization Operation Shamrock, told ICIJ, regarding anti-money laundering and illicit financing, it is kind of just open to interpretation when it comes to foreign businesses. So can they use the loopholes to do more harm to U.S. citizens? The timing of this legislation is particularly significant given ongoing tensions with traditional financial regulatory bodies. The Trump administration has simultaneously moved to significantly cut funding for the Consumer Financial Protection Bureau, the agency created after the 2008 financial crisis to police banks and financial firms. Critics draw parallels to the deregulation that preceded the 2008 financial crisis, noting that the derivatives industry successfully lobbied for lighter oversight by essentially writing their own regulatory framework. While the Genius Act represents a major victory for the cryptocurrency industry, it's just the beginning of what industry lobbyists hope will be a comprehensive overhaul of digital asset regulation. 2 additional cryptocurrency bills passed the House during Crypto Week and are now heading to the Senate. The Clarity Act, which would transfer regulatory authority over most cryptocurrencies from the Securities and Exchange Commission to the smaller Commodity Futures Trading Commission, represents the industry's next major target. Critics fear this transfer would result in significantly weaker oversight of what they consider a dangerous and volatile financial sector. The Anti-CBDC Surveillance State Act, which would prohibit the Federal Reserve from issuing a central bank digital currency directly to Americans, has also advanced through the House largely along party lines. Industry analysts predict that if all 3 bills become law, the United States will have fundamentally transformed its approach to cryptocurrency regulation, potentially making America the global center for digital asset innovation investment. According to Noelle Acheson, economist and author of the Crypto is Macro Now newsletter, this legislation represents, quote, the biggest deal in crypto so far this year. She emphasizes that because this is federal law rather than agency regulation, future administrations will find it extremely difficult to reverse these provisions. Financial experts predict that the stablecoin market could become one of the largest holders of U.S. government debt in the coming years. According to a recent ARK Invest report, if current growth trends continue, stablecoin issuers could potentially tie large portions of U.S. debt to what remains a dubiously regulated and often unstable asset class. The cryptocurrency industry, which spent over $100 million in congressional races last year and is building an even larger war chest for next year's midterm elections, views this as validation of their political strategy. As President Trump fulfills his campaign promise to make America the, quote, crypto capital of the planet, the Genius Act represents either a historic step toward financial innovation or a dangerous precedent for presidential conflicts of interest, depending on which side of the political aisle you occupy. What remains undeniably clear is that yesterday's signing ceremony marked a fundamental shift in how the United States government approaches cryptocurrency regulation, with the Trump family positioned to financially benefit from legislation signed by the president himself. This story is far from over. We'll continue monitoring this developing situation as Congress considers the remaining cryptocurrency bills and as ethics experts analyze the unprecedented conflicts of interest surrounding this historic legislation.